Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the chart. So Bitcoin getting a little bit of a dip to the downside as predicted and starting to reject off the cloud, which we'll get into later. We're jumping the gun. And this 0.65 level of the diagonal pitch fan we've had price in since January, back here actually, beep, and we're watching it bounce off that 236 all the way up, and we're seeing this possible rejection off the 0.65 level in between that 618 idea. Let's go into high block capital. What is high block, you say? Well, people lock that liquidity into the charts to get burnt to a crisp for not using a stop loss, and we get to see where those crispy characters are, so let's do it now. Shout out to everyone here. Booyah, booyah. All right, so we got a little bit of a rip and dip to the downside here. Let's go ahead and switch the max liquidity here, because it's what we're used to looking at in terms of values. So they came down into this $24 million level, and this $186 million in 50x liquidation, they ripped into that.
Fatality.
And then they started to induce some shorts at that time to the tune of, looks like only 20 million. Can't be right. 145 million, and then they V-shaped into the 100x shorts for over leveraging themselves.
Fatality.
And then immediately dipped back down into the 100x longs.
Fatality.
And it's just a ping pong of price action as they induce liquidity on both sides and use that liquidity to profit. And most likely the exchanges do this and use algorithmic delta divergences and things like that, using footprint charts to trap traders and take their money because they have better algorithms and better formulas. And I was getting into a discussion with somebody earlier today who was purist price action, and they were like, I can predict where all of the pools of liquidity lie without any of this stuff. And I'm like, that's great. Do you have a history to show it? And they couldn't show it. And I'm just saying, like, if you can, why do they have all these tools available, and why do they cost like $90 a month to have? Like, why would people find value in looking at these levels if they were not valuable? It takes away, it removes guessing. Essentially, even if you're just a purist of price action, you're still essentially guessing. You're a professional speculator. And so everything's a speculation. So it's about removing the guesswork and looking at actual information and actual data and actual pools. And all of the indicators are codified algorithms of price derivatives. It's derivative of price. So everything is price action in nature. So on that note, let's go deeper into the liquidity as the first facet of the pillars defines itself. Liquidity, math, and momentum. Those are the three pillars of trading, and structure arises from such. So saying structure after liquidity, structure is indicative of all these other things. So let's go into the higher time frame here and take a look. Here we go, 7-day time frame, max liquidity on. So coming down into, and most likely people that preface things like, you don't need anything, you don't need indicators, you don't need anything, you just need to pay for my mentorship. It's like, oh, footnote, pay them. All right, so you have the 37,100 region, which it tapped down into, and then they came back into some of that V-shaped we just looked at on the 1 minute time frame, and possibly coming lower. There is that higher pool up in that 38.8 region on the 7-day to watch out for. It is a thicker band of liquidity up here on the 7-day. When you start to take a look on the higher time frame, you start to see the potential draw and fatigue to that 34K sweep that we've been talking about for some time now. And if you expand your vision to the 3-month, you start to see that draw getting ever more clear as the thicker pools present themselves even below. All those profitable trades have stop losses just below the lows, and in order to go higher, the dead weight needs to be knocked off. So at some point the shorts will get paid and the longs will get wrecked. So when is that time is the question. We are on Monday, November 27th, False Move Monday. Watch out for wick wackiness on both sides. And yeah, on the 6-month also has some 34K goodness. Up above, you have some pools at 38.7, 39 even, tapers at 39.3, but overall not impressive on the upside. Looking at the 2-year, you have a billion dollar pool at 38.8, so that could be swept one last time, but overall, you have some down below that 34K region on the 2-year. Basically at that 33.6 on the 2-year has the $40 billion down there. Overall, just the largest band has that retrace into the halving coming all the way and hitting the lows at some point in the future. When will that be? I have no idea. We'll be here every day, so it doesn't matter. Don't need to speculate into the future. So yeah, going back to the monthly, you have those pools up at 38.8 to watch out for. Did they get enough liquidity on that grab there? Let's go into the Binance chart and refresh our perspective. Okay. Well, first we'll show you how we got these levels of these ideas for these fibs that they're bouncing off of right now. So first and foremost, you had this impulse to the upside here, impulse retrace on the daily time frame. This impulse retrace contains some math that if you stay above this 236 level at 34.688, which we did over here, we started to SR flip it from November 4th, and then from that point went up into that 786 level of 37.750. And then started to meander back down at this trap door, I call it, at the 706 institutional level. Boom, dropped back down to the 236, hit an order block, came back up, 786 rejection. And we're currently just playing off of this 786, 706.65 of this bullish trend-based fib of the math. Could we come up to this 38K region? Yes, we could. However, there is no real liquidity up beyond 39.5. There's the gap there. I mean, you could come up to that 40K region. There is some pools, they're not in double digits yet, but they are inducing some, but the majority lies double digits down below at that 34K. So at some point you will have to pay the piper for those longs and go down and sweep that. And I don't care which direction it goes, I'm just a reader of the liquidity and the math. So at some point coming down and sweeping these lows and coming back to that 236 again would make sense. But as of this, the trend is to the upside, so we still have these pools up here for people to look at. So far been banging our head up against it. And then what is this curvature? We need to go into the third pillar of the trading trio, which is the momentum. Link in the description for more. Heads up display is on, code over there, and here we go. So the momentummaster.info, you can scroll down to features, toggle everything at your leisure. The thing we were seeing for the downside was the trend cloud yesterday alongside the baselines. This is a volume weighted cloud formula which expands and thins according to the amount of volume present. And the baselines are one of the few leading moving averages on the market. So we saw those in our Trinity, and also the stochastic array printed a nuke, which is the opposite side of this rocket here. So let's go ahead and take a look first with what we were seeing, erase that, and then start from scratch. Okay, so from where we were last time, right around here, we're looking at the failure of the hourly cloud, the thinning and the curvature. The tapering to 3 o'clock was giving this angle here, which played out into the future. You see that? So that angle gives you the insinuation of what may follow into the future. There is logic to it. Some guy was telling me it doesn't have logic. Indicators lack logic. I'm like, just because you say that doesn't make it true. You could say the sky is not blue, but it doesn't change that it is 405 nanometers in length. And whatever color you want to call it, it is 405 nanometers in length. And the ATR is the ATR, and the cloud is the cloud, and this fatigue is fatigue. And that is backtestably true. You can go back and take it to the bank, and then we do. So here we go. It is, you got that 1.78 level here, and started to see that rejection, the bearish retest they gave you during the London session, and boom, drop. So now we're starting to see this respecting of the cloud and the volume here. So we're going to remove this and start fresh. It hit this pool that we outlined at 37.3, that $200 million pool that was becoming dead weight. There is still some dead weight down here. There's a pool up here / fair value gap at 38. So let's go ahead and go to the daily. It's nice to have discussions though. It's nice to have your ideas challenged, but if people are not receptive, they're not receptive. So if we go to the weekly time frame. So the weekly closing in about 10 minutes, we're starting to get this indecision, spinning top doji-esque looking thing. Basically traded in the range here for the weekly overbought on the stochastic, money flow and RSI coming together here, and the drift of the Williams still holding true. Can you drift and bring this up over a few weeks, or is it going to spike down in a manner like, basically, where did it do that? Somewhere back here in November. Boom. So if we go to the 3-day, the thing that we are looking at, and we said in the next 3-day will also close soon, and the 3-day is closing beneath the baselines. This is something deja vu from June. I remember talking about this back in the first insinuations back here when we started closing candles beneath the baselines here in June and July. So we are starting to get the baselines on the 3-day closing beneath the baselines here. Started to get some candles in July 18th, and then we started to get on July 27th, and I was like, we're getting the cross down event possibly flashing, and then it was just, we could not get above the baselines, and boom, dumped down. So could we be seeing very much of the same here? Yes, we could. So the baselines are your first sign of reversal. That's why they're one of the few leading moving average formulas on the market. And yeah, if you find this leading baseline with price action beneath it, downside begins. So we're starting to see that potential fatigue on the 3-day. Granted, we get above the adaptive here, so this adaptive moving average has been one more bullish structure, which is why we were not looking to short it just yet, because we got above it, unlike March here of last year. So one interesting sign for a possible market reversal is this baseline and candles closing beneath it. I said in about 6 to 9 days. So now it's about 6 to 5 days away. 2 more 3-day candles after this, where this will possibly cross down and give you that insinuation of downside. Does it mean direct downside? It might go down and go up and then go down some more for ABC, but you're seeing that first fatigue start to present itself here on the 3-day. The last time it did that, once again, was July 24th, and then we saw that initial fatigue. Once again, it went up from that point and went even slightly higher from where that cross down event went. But when that rejection went back down, you saw that with a massive play to the downside. So are we going to see very much of the same? Looks like a shooting star on the 3-day. Something to think about as we come down here. Daily time frame had some hidden bullish divergence on the RSI, and it started to play out here. If we look at the daily time frame, clouds starting to taper in a manner here, and the baseline still acting as suppression. If we go to the 22 hour, the broken time frame of the hidden frequencies of the market makers, you're getting some bearish divergence that started to play out. The money flow went above the RSI, started to come back down here. We were looking at some money flow fatigue on one of the time frames here, most notably the 6 and the 4 hours. So we're going to look at that real quick. The 12 hour does have some money flow beneath the RSI, and you were previously having some candles and the opening of these baselines still showing momentum to the upside, but it's starting to taper here as they come closer together. The MACD, leading MACD, also starting to cross potentially here. You have a potential cross of the MACD on the 12 hour, and then it could be coming back down to that cloud. Cloud on the 12 hour is the angle that we have this little bit of happiness here. This yellow line is basically the 12-hour cloud. So the 12-hour cloud is giving you some insinuations of thinning and tapering to that 3 o'clock angle, and you would see something like potentially coming down to this. If you broke this with a fervor and then broke down, you could be seeing this continue. You could see this continue in a manner. What you'd like to see is acceleration to the 36K region, fatigue, and then basically possibly bearishly retest down lower on that 12 hour. You'd like to see some acceleration, conviction behind the movement, momentum down to that 34K sweep. You still got the super trend on your side, so be careful. The last time we hit the super trend, we got an order block off it, boom. And the second time was off the cloud just beneath it. And I think that was a super trend on the 6 hour, so let's go to the 6 hour now. It was just below the super trend. So the super trend, 6 hours. 6 hour, we were talking about watch out for this cross down event. That's what that arrow was in our charts. We were saying the 6 hour, watching the next 5 hours was the last thing we said as we signed off. And then that 5 hours later, we had that cross down event lock in, boom, and then we dropped for that London session. So this is how the baselines have you at hello. They give you those things. They are also alertable on whatever time frame of interest you're looking to swing or scalp. It's fractal in nature. They play out, as we said back here. The last time it crossed down on November 13th, boom, you had a massive move. You had some meandering fake outs here, but either way, you would have been break even on your trades and been able to reassess and take the cross up here, cross down, cross up, cross down. So they simplify the noise, if anything else. So the 6 hour cloud is starting to hold by the looks of it here, but this just looks like it's trying to balance out that drop and take out those 100 extras as we ascertained in the beginning. This is a blue vector candle, which is a stopping volume candle. If you're not familiar with PVSRA strategy, you can Google it. PVSRA is a thing. It is dealing with volume, green and red vectors, 200% of the previous 10. And blue and pink is, I believe, 75% of the previous 10 candles. So it's a stopping volume candle. The money flow is coming beneath the RSI now. We had the money flow above the RSI up in the nuke range, and the money flow was coming back down again. Now we have this curveball to potentially come up again, so watch out for that if this RSI value does not reset in the next 2 minutes. If we go to the hourly time frame, the hourly time frame is overbought without really getting back above the range here. So this overbought nature could come for a hard reset here. You had 1, 2, 3, 4 red vectors on the hourly time frame, and now the volume is starting to, you had this limit order bounce. You do have a cross-up event of the hourly time frame to watch out for, of the baselines, but we have basically given back how much of this impulse. We came down to the 706 level of this impulse. Is this, we're basically maintaining the cloud and the super trend though, so if you're looking at it in terms of a play, this could just be a continuation idea to the downside, and then that could have been your fair value gap entry for a continuation play. Let's go ahead and take a look. The hourly play is still bearish in nature on the stochastic. If we look at the 15-minute here, 15-minute getting a deep stab. That aggressiveness in nature is not the type of retrace you'd like to see that is insinuating an order block bounce. It's a offloading distribution position of some bigger player, which is possibly cascading into lower prices. So if we look down here, once again, you have this continuation idea of the ABC. We're maintaining this 786 rejection. Does the trapdoor of this blue 706 open and accelerate? Is the question. 15-minute is giving you this curvature here, but still purple in nature, not really thinning and staying thin. There's no buying volume entering. Let's go ahead and take a look into the 1 minute some more. Shout out to everyone here. What's up, MMA Mark? Quick question, do you do MMA? I respect those that stay fit and do fighting above all else, because that's, you know, putting yourself in harm's way is a thing. I can't remember the last time I got in a fight. I think it was at a bar somewhere, but some guy said some racist remark to my friend who's half black, half Japanese, and I was ready to throw down on his behalf. But yeah, that was the last. He was some guy from the Czech Republic or something, and he's like, I don't like you. And I was like, you know what? I don't like you. It escalated quickly, and eventually we had to leave. Don't want to get in trouble in Japan. They will kick you out quick. All right, so yeah, while we wait for that candle to close, actually everything did close, so we can see how this updated, got KD lines crossing. One benefit of looking at the market prior to the daily candle close is you see how the candles update. So the analysis we previously gave, you get to see literal changes in things getting closer together and stochastic probabilities updating from that cross. So everything that we just said, you can go back and compare it to now and see that there's things that update and things that cross because of that close of that candle. And everything starts fresh on the day, so the daily candle gives you all this fresh data to look at. So the 6-hour money flow is still above the RSI, looking like a struggling thing. You could get that soft suppression of the 6-hour here by the looks of it. Not really feeling like I would want to play against this 6-hour here. This 6-hour cross down event could be one of these dealios in your face. By the looks of it, it's rejecting off of that baseline, so I'm not really keen on longing this region. I've been saying that for some time now. So getting the 4-hour stopping volume candle, the money flow is beneath the RSI, but could easily just continue as you get suppression potential from that Williams hard reset. Can we get a hard reset for a change, like having the longs giving these scalps of meaninglessness in these ranges? It would be nice to see a sweep, a solid sweep of that 34K range, and give a nice little dump in the face of all of the longs, just for old time's sake. It is Monday, November 27th, so that false move Monday hourly time frame also looking to play against you. So you got the hourly and the 6-hour potentially going against any long idea. Meanwhile, the 15-minute and the 4-hour are looking to continue, but that 4-hour Williams is not in a sweet spot, even though the stochastic RSI is. This is why we have the Williams together with the stochastic, is that you will see how they play off of one another when you have the Williams potentially pushing things lower. I call it the suppression of the stochastic. So here we go. Going into the market now, taking a look at the broader market. NQ also getting a little bit of a retrace down into a double bottom idea down here at the 786. After previously seeing some bullishness as we put in some higher highs here, reaching into some fib levels. The Dixie was traversing lower as they gave up some of their value to yen, JPY, USD. Shout out to Dingo for that rocket play that we had down here. The rocket ship he was pointing out back here started to play out. Now Euro, USD, and all these other assets taking a little bit of value back from the dollar. So the dollar giving the risk on assets that little bit of bounce, but everyone taking a little bit of profits here, as it seems everything is tapering slightly to the downside. The hourly time frame on total for the cryptocurrency market also looking like it is curving to the downside and getting this rejection to possibly come lower. If you come to the the total 3 and the altcoins also getting those nukes locked in on the hourly time frame. Let's go see if they locked in on higher time frames. They did on the 6-hour, and so this could also be making a bit of a retrace to the downside. You have a shoulder, head, and a shoulder. You never made it. You got 4 hits up in this region. Apparently crypto likes the number 4 for some reason. I'm not sure about that, but let's go ahead and take a look at some, basically the bearish super trend on the total 3. So watch out for your alts. You're getting that locked in on a 12-hour too. That's pretty strong in nature. The 12-hour cloud is starting to shift here. So this cloud on the 12-hour is starting to taper, suggesting that you do make this break below and possibly come down and sweep. This area for the alts. And we were talking about Bitcoin dominance rising and holding this cloud. We said it needs to reclaim that cloud for the dominance to rise. And one thing we were watching out for was this cross down event. If the dominance drops, it would give the alt some rallying point. But overall, yeah, you still have the 6 hour to work against. And the one thing we were looking at for people for the downside play was a reclaiming of this cloud on the 12 hour, I believe it was. Yes. So we need to see this reclaim this cloud. We are at a flashpoint here where the cloud is getting thin and the angle is insinuating upside for USDT dominance. So this is where it could be making a grandstanding impulsive move to knock people out of their trades, and this is inverse to what BTC is doing. So when you see USDT dominance wanting to rise, it's wanting to kick people back into their USDT from their trades. So watch out for your trades as we start to insinuate downside. The 12 hour also starting to cascade here as the algorithms kick in with this new stochastic update and start to see people cashing out into profit. And yeah, today is much easier to read than the last few days over the market. It's a very quick snapshot of where we had it. We had the nukes locked in. We had the ABC for you on a silver platter, and even if you missed this, you could have re-entered here, trimmed and re-entered. And yeah, does it hold continually? Do we get all the way down to that 36,660 region and below? Well, we could. It's the hourly dump plus the 6 hour suppression is what we're looking at here, and that is my story, and I'm sticking to it. Do you have anything you want to look at while you have me? I will take my kids to my friend's house today, so I have stuff I need to be doing right now. So anyone, Muay Thai and Jiu-Jitsu, that's cool. Good stuff, man. More power to you, man. I love that stuff. I watch it's like a chess match, so I respect anyone that does that, puts themselves in that mental state to get potentially hurt. So let's go ahead and yeah, any questions, anything you want to look at? But this is why there's a method to the madness of Momentum Master, and you don't always need to have history on. I just like looking at points where it held each time. So you could turn the history off and just keep it where it's at currently, and it looks much cleaner. It probably, from a marketing perspective, would be better to have the history off, but I don't care. I'm not trying to market it per se. But yeah, like these nukes will remain not locked in, as will the rocket ships, but it will just show the latest thing. But I like to see the struggle on the stochastic, so I just turn on the history for everything. And this formula is candle close specific, so it will show you when each candle closed in that state. So that was a very aggressive dump with the 4 locked in, so their V-shaped recovery idea is more realistic than here, for example. But even here it locked in and then it started to play out. And then if you go into lower time frames, you see all of the candle close data within that. You see the 5 time frame struggle, and all of these are just information within the quick guides here. You got the circles representing 5, 15, 1 hour, diamonds representing 4, 6, 12, 22, and the X's of at least 1 lower and 3 medium time frames. And that will all let you know on your phone with that set and forget one alert. It's a perpetual alert. You don't need to set it multiple times. It will always let you know what's going on. So on your phone, you'll just receive, oh, 7 time frames oversold. Those 5s and those 6s play out. And so the 5s and the 6s were showing you fatigue here. You're overbought, but you're not going anywhere. Overbought on 5 time frames, and boom, overbought on 5 time frames, boom. And there is some algorithmic bots there are rich people with bots that do trade off of this stuff. So it's good to have that information, because there's people that trade off of this. In my humble opinion, of course. All right. So any questions, comments, anything? We need some chain link dissected. All right, we will do that. Chain link USDT. Last time I remember we had that little link idea out in the, what was it? We had that little scalp to the upside. So now we're going to look at how things are doing. Whoa. On the entire move up here. Let's see. Let's first get the liquidity in line here with Link. It's nice that they offer the higher time frame pools with this stuff now too. They didn't previously allow you to do the heat map like this. It was just the 1 minute levels for Link. So let's do that. I like Link. When I was looking at LTC for my man, Litecoin had less liquidity than Link. Link has a cleaner liquidity pool to look at. See, it looks like you have this large pool above the highs at 15,586, so they might want to sweep that one last time, unless the shorts have been, smart money has positioned themselves in that short pool. The overall draw on the monthly is to the upside. Sorry, I'm starting on the monthly. I should start here. So on the 1 minute, you have this $8 million short that's opened up at $15 even that they could come back to. There's an entire pool of liquidations up there that looks like it's aiming at for this V-shaped to say no thank you. You may be right in your analysis, but we're not letting you get paid kind of thing. And that's why altcoins get manipulated a little bit more easily than Bitcoin, which is annoying to say the least. If your analysis is accurate and then it goes to your point and liquidates that person and then goes in your favor, that's exactly why. It's a little bit more threadbare, so it's easy to manipulate up to that level. So coming to this $15 region, even though the longs are imbalanced to the tune of 32 million to the downside, they might be coming for that $8 million short up there by the looks of it, just off a glance. And then on the 7-day, you do have some large liquidity pools to a few million up in that 15,688 region. And if we go to the monthly also has that amount, a few million up in that 15,586 level. If we go to the 3-month has an ultimate draw down to that November 3rd $10 region, so an eventual sweep down to the lows and below, but those positions looking to offload at some higher place by the looks of it, off of some of that short liquidity. But with the fatigue that we're seeing on the USDT dominance, it could just be suppression that leads to downside paths. Interesting. I never looked at it on the 2-year before. So we'll go back to the monthly here and then go into the charts. So one thing that we can do right off the bat is there was this impulse to the upside here. It basically held, wait, this was from September. Okay, so we had the October run, and the super trend on the daily has been holding pretty strong. Okay, so we came back into these fib levels. We held the 236. This was the impulsive move to the upside, and then they retraced back down on this adaptive on the daily. The 236 support structure held at $11.423, and then we shot up to the take profit at 1, and then nearly got to the 1382. First got a rejection for 1 day at the 0.65 to reassess, and then burst through. And now we're coming back to these levels at the 0.65 and coming back into offload positions again. Daily time frame cloud still pointing healthily to the upside, so that path we were talking about up to that $8 million character at $15 seems to be the case. So the $15 character up here, not that far away actually. They're basically up in that region. So coming up into that guy seems to be the case. Let's just make sure it's accurate. It is at that 15, yeah, basically 15 even, so we'll just call it $15. So there's a $15 guy, $8 million pool up there that they are probably coming back into. If we go into the oscillator, the daily time frame looking to play out as well, the money flow beneath the RSI looking to burst. If we go to the 22 hour managed to reclaim the cloud in the last day, and now starting to manipulate up to that short that we were talking about. Looks like the ultimate draw and the market analysis to the downside is correct, but there's just an over leveraged pool up here that they're possibly coming up to at that $15 mark. Does it continue on its merry way to the downside after that? I have no idea, but the cloud is giving you insinuations of such. And if we come to the 12 hour as well, 12 hour managed to reclaim the cloud. They did a stab to it and now starting to come back up. If we take this trend-based fib for some downside action, we do impulse retrace to here. Shorting beneath the 14,496 region would be the ideal thought process. So until you can get beneath this region, essentially, unless you can go down here, bearishly retest, then you won't be coming down to these regions until you can break that 236 and this cloud. So as of this right moment in time, I would not be looking to short just yet on Link. It actually looks like it might be going up to that pool up above for another stab up, a double top, an M-like pattern perhaps. So this is the bearish trend-based fib level at 236 at 14,496. We are not maintaining that, so the idea of going lower has been negated. So this is still in lieu. We are waiting for that to occur for confirmation, higher probability play. If we go to the 12-hour time frame, starting to come lower here on the 6th. We might actually see that $8 million character liquidated as we talk, because they're coming down into this guy. So the 6 hour is coming down here, but it looks like a large amount shorted, so they're coming right up into those shorts that did not pay themselves. They already gobbled up. If we zoom in here, they already gobbled up the 100x and the 50x people. Then they are now coming back for their partner in crime at 25x up here, and the entire band of people trapped up in that region. There's another $5 million short up in that region as well. So I would not be surprised if they come liquidate that guy right now. And this is why looking at the liquidity is important for a first thing, so you're not guessing about measured moves, you're kind of actually seeing it where the mark is. And so this little range up here. This is your fair value gap range as well, coming back to get the imbalance by the looks of it. Does it continue? Do we continue up into that region for more? But that was immediately where I was seeing it go as it was happening. Now you're starting to see this 15-minute shift here on the cloud. If we come to this impulse here, this was a shallow retrace by the looks of it. Yeah, 382 bounce. So they're bouncing off the 382 of this impulse. SR flipping this level and starting to head up into that pool. Overall, the short idea to short up here, it was good while it lasted. They're just basically coming back to manipulate into these pools up here by the looks of it. It's easily manipulated by exchanges and things that don't want to pay somebody, because obviously the exchange has to pay the person leveraging the money, so they use their money to flex on that person and take their money back. So that's why you got to be quick on the draw with shorts and everything on alts, because they pop and they drop at a dime because they're easily manipulated by the exchanges. And the exchanges we've all seen are shady AF, which is why Binance is now paying a fine and FTX imploded. So you got to be very careful and pay yourselves as you enter profit. So yeah, coming up to this level, does it continue? Not sure about that, but as of this moment, looks like it could be. And if we do the bullish, like a small little trend-based bullish fib here, you can do like this, and this lines up with the 786. But if it wants to go higher, you can go into these regions. Does the liquidity match up with that? It kind of dries up at that 15.6 mark, but it could consolidate and go higher. There's not really much down below on the minute time frame. And we have that 15.586 region, 15.586. That would be up in this range high level. So yeah, as bearish as I was looking at BTC, as soon as I flipped to Link, I was seeing that long pool, and now you're getting this crossover event of the baselines on the hourly here. So it's starting to possibly cascade to that hourly time frame. You're getting this helix of the baseline cross up event. So watching this lock in the next 35 minutes will give you this possibility of a cascade event to the higher time frames, in which case, you know, alts might be seeing a surge here. Looks like there's some transfer over into the alt pools here. Interesting. So they're giving a little bit of an alt burst by the looks of it. And that is basically it. This is how I would break it down, and I would be using these fibs to you know, the move looks like it was about here. If I go back to the 5 minute, basically as you asked me to do the analysis was when it started to break out. So you're seeing this break off of the 382 level of this impulse coming up to this $8 million short character up here, and potentially going up into those regions above. And then you'd watch this baseline cross up event down here. Was, if we do this from here, there's a fib retracement down here. So there's an equilibrium bounce off of that level. And yeah, basically you started to meander around this cloud, which is mighty thick. When you flick the cloud and the cloud is in your favor, what do I mean by that? Well, you go For longs, you burst above it and you come back and you kiss it. And then so they came back and kissed this cloud on the 15. You had the cross up event in your favor. So this cross up event down here on the 15 was never negated by the baselines. The baselines were still beneath the price even as you came down here. So this would have been a shallow retrace entry at the 382, and then boom, you're coming back to that guy up there. And then now we're watching to see if this cascades to the hourly. So the hourly baseline is now crossing up. Does it close with that cross up in effect? If so, you can come up to this region here, and then also there's that pool up in this region. So there is a pool up in that 15,586 region. 15,586 would put you up at this deviation up here. So you could possibly sweep entirely up there to that region. So if you're in a long, congrats, you are correct. And now they're going to liquidate that guy live on the stream. And we can say fatality on their position. Well, looks like it's going up to that level. Here we go. Well, it looks like it hit it on this chart. So did it hit it? Oh, there we go. Yep, they got him. They got him.
Fatality.
And that's what happens when you over leverage and get trapped on a V shape and don't close it. So that guy should have paid himself, or shouldn't have opened into support. That's for one. Don't open a short in support. Open it into resistance, my friend. Lesson learned, I hope. All right, so one thing to also look at liquidations, you can go to coinglass.com/liquidation data, and maybe you'll see this link guy that got liquidated here. He'll probably show up on here somewhere. You can look in the last hour and stuff and see who was liquidated where. Link 66k liquidation over leverage, probably in that 8 million guy. There you go. That's him. All right, so well, that's all the time I have. Thank you for your time. Nice. Saw the action, Max Long. Nice. All right, guys. Well, that's all the time I have. Watch out, though. It is False Move Monday. They don't call it False Move Monday for no reason. So watch out. If this is going, it could possibly go either direction. There is that 38,550 pool. So it could just basically burst in your face. So be careful on either side of the trade. Mondays when I just like to observe and back test. So be careful out there. And thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff. And we'll catch you